A land contract, also known as a contract for deed, installment sale agreement, or a contract for sale, is a real estate transaction in which the seller finances the buyer's purchase of the property. Instead of the buyer obtaining a mortgage loan from a traditional lender, the buyer makes payments directly to the seller over time. The seller retains legal title to the property until the buyer completes the payment terms outlined in the contract. Key features of a land contract include 1. Installment payments. The buyer makes regular payments to the seller over an agreed upon period, typically in monthly installments. 2. Title transfer. While the buyer is making payments, legal title to the property remains with the seller. Once the buyer fulfills the payment terms, the seller transfers the title to the buyer. 3. Interest and terms. The contract specifies the interest rate, if any, and the terms of the payment schedule. The terms may include a balloon payment, where a large final payment is due at the end of the contract. 4. Default and forfeiture. If the buyer fails to make the payments according to the contract, the seller may have the right to terminate the contract and keep the payments made up to that point, essentially forfeiting the buyer's interest in the property. 5. Maintenance and insurance. The buyer typically assumes responsibility for property maintenance and may be required to obtain insurance coverage. Land contracts can be beneficial for buyers who may have difficulty qualifying for traditional financing or for sellers looking for alternative financing options. However, both parties should carefully review and understand the terms of the contract, and it's advisable to involve legal professionals in the process to ensure that the agreement is fair and legally binding.